Welcome back to Squawk Box this morning. More protests last night in parts of the country, 23 days after the police killing of George Floyd. With the topic of police reform front and center, the little-known role of the municipal bond markets is largely flown under the radar. Leslie Picker joins us now with more on this unique story. Leslie.
Hey, Andrew. So the village of Hempstead in New York owes $4.5 million to a man who says his colon was ruptured during an arrest. Instead of pulling money from the city's budget or the police department, Hempstead's Board of Trustees voted unanimously last month to take on debt to pay for the settlement, according to minutes from that meeting. Now, looking to the municipal bond market has become an increasingly common way for cities and, in the end, taxpayers to fund the cost of paying for claims of police misconduct. A study by the Action Center on Race and the Economy found that over the decade ending in 2017, investors generated more than $1 billion in interest from these types of bonds in just 5 major cities. The total cost to taxpayers in those 5 cities was almost $5 billion. Now, critics say this is shielding police from the financial consequences of their actions and therefore should be a bigger part of the conversation for reform. Others say that access to borrowing is actually necessary to ensure that victims are fairly compensated for abuse. Now, it may not always be clear to investors that they're purchasing bonds for this purpose. Sometimes the securities are issued as so-called judgment obligation bonds explicitly dedicated to funding settlements, but other times they're wrapped in a larger general obligation bond issuance, guys.